You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome back to the Infinite Banking Mastery Podcast. Thank you so much for listening. What's the right financial level to begin IBC with? That is the question I thought I would answer today. Now, of course, it is going to be different for everyone. It's not just a blanket statement or you should do this percentage or this amount for all people. I've just been asked this question a few times in the last few months, and so I thought I would address it. And of course, there are some constraints placed there by the insurance company that we have to consider. But my usual answer to most people is, well, as much as you can. Put in as much as you can. If you have a range in budget, how much you're thinking, I usually will tell someone to go on the higher end of your budget because you can always bring the premium down. Instead, though, you should be asking yourself, how large do I want to build my pool of cash from which to borrow against for future purchases, needs, or investments? Like, how large do I want that money pool to be for me to be able to access for the things that I want to do with it, the things that I need, or my retirement? How much money do you want to have in retirement? For example, if you're thinking that you want to build a pool of cash within a whole life policy to begin funding real estate investments, to begin building a real estate portfolio, then most likely you're going to want that pool of cash to become as large as possible, as soon as possible. And that's only going to happen with larger premium payments. I feel like occasionally some people are confused on what amount they actually have access to, or do I have access to the death benefit? No, you do not have access to borrow against the death benefit. It's against your cash value account, which is going to grow as large and as fast as you are funding it, especially in those beginning years when I know you're excited because you just started this and you're ready to rock and roll and use it for you have all these brilliant ideas for what to use it for. So in those beginning years when you're wanting to get started using your funds, the size of it is going to be based primarily on how much you have funded it in premium dollars. So you're not going to be able to borrow a large amount against your policy right away unless you're funding it with a large premium. Because you have to keep in mind as well that there is a startup cost to the system. And why is there a startup cost? Well, because we're buying life insurance. There is a cost to the death benefit. Of course, we are minimizing the cost of the death benefit when we are structuring a policy to use for the infinite banking concept, but there still is a cost to the death benefit, and that is essentially the base premium, which you basically do not have access to in the first year. Now, when talking to people and teaching why there is startup costs and what do they have to do with, or why do we have that within our policy, I often tell the story of my first business that I had, which was a coffee stand. And this coffee stand cost me a whopping $40,000. Of course, that's because they made me dig for sewer and water lines, unlike any other coffee stand in the area that had a blender. But anyway, that's another topic. Cost $40,000 to start this coffee stand. But I spent that money in hopes, of course, that this business is going to create cash flow for me. And after I had purchased all the machinery and put the building up and dug for the water and sewer lines and electrical and had all this stuff in place, the next day I did not have any amount of that $40,000 that I could access. The idea was I spent that money for the purpose of having cash flow from my business and having a successful business. So just as I was expecting to have cash flow from my business as I worked the business and got it off the ground and turned it into a successful business, it's the same with life insurance policies. And when you're building a policy for the infinite banking concept in this particular way, the idea is that this is going to become a cash flowing asset for you, but not right away. In the first few years, you do have some startup costs. And really the big startup cost year is year one. After that, it really, really scales back quite a bit, and you have access to almost dollar for dollar everything you've put into your system. Not quite, but almost. And then before you know it, it turns around and it becomes cash flowing. And every premium payment that you send in yields a higher cash value growth every year thereafter. And it just grows every year and becomes more and more amazing. But that is the reason why we are starting this. And there is a cost to it. And it's much less than starting an actual bank. It's going to be a much, much lower cost than trying to start an actual bank. So there is some cost because you're still starting up a system, just like any kind of system that you intend to be a cash flowing asset for you. So because of this startup cost in the beginning years, that is why it's really going to make a difference how much cash you have access to. It's really dependent on how much you're funding the policy. Your policy will become cash flowing and it will be amazing, and it will be even more amazing each year that passes. But in those first years, the amount of cash you're going to have access to is going to be dependent on how much you're funding. So when trying to figure out how much to begin your banking system with, you really should be asking yourself, how much of my money do I want to be earning for me, interest and dividends, for the rest of my life? How large do I want my pool of cash to be when I get to my retirement years? How much money do I want to be growing on a guaranteed basis? How much do I want to build up in my pool of cash so that I can borrow more against my policy, hassle-free, and less from banks when it comes to any kind of loan you're going to have to take for your business, for something you need, or for investments? How much capital do I want to be able to control? So again, I always suggest to start on the higher end of your budget because that's going to build that large pool of cash from which you can then finance purchases or investments or take over debt or invest in your business. You want access to as much capital as possible throughout your life. And you want as much of your capital to be working for you as possible and to be earning for you without you having to do anything. Be earning for you whether you're spending that value or not, to be always earning for you. And if you're really struggling as to how or where you can get the premium from, you're not sure how you'll be able to save into this system, I can oftentimes help people figure out ways to free up cash from different things, or where we can look for money like tax returns or paying our credit card debt differently or mortgages differently. Sometimes I can be helpful in those areas to help kind of find the cash to begin your system. I just want to add to that, one reason why I suggest starting on the higher end of your budget is because you can always bring the premium down. Very easily, you can bring the premium down. So, for example, a reason why you can bring it down is because you can skip paying the paid up additions at all if you want to in any year. You can skip those paid up additions, at least with one of the companies that I work with, for 4 out of every 5 years. So if you were to have a hardship come up, or maybe you are using bonuses to help fund your paid up additions, but you don't know if you're going to continue to get that same bonus, or you're concerned you might not get it next year, it's okay because you can fund anywhere from 0 to the full paid up addition amount that you started with in year 1. You can pay any amount of that in future years. So for example, if we have a $10,000 annual premium and $4,000 of it is base premium and $6,000 of it is paid up additions premium, you would be able to skip paying the $6,000 for 4 out of the 5 years, or you could pay any amount of it. You'd be continuing to pay your $4,000 every year because that is the base premium and it supports the death benefit and the whole policy. So you would have to continue paying that. But you do have flexibility with the $6,000 in this example. And you could fund anywhere from $0 to $6,000 in any year. So that's why I'm saying, well, okay, start at the higher end of your budget because we can drop it to almost any number all the way down to the $4,000 in this example. But you can't easily go up. So if you're thinking, oh, I don't know if I should start on the higher end, or maybe next year I'll just increase it. Well, that's not going to be easy because once you've started a policy, that existing whole life policy, you cannot easily add money into it over and above what you started with. When we start, we're starting at the ceiling of our policy, at the MEC ceiling. And so it's not going to be easy to add more funds and will most likely cause it to MEC. Now, there is a little bit of a window where maybe you can add a little bit more, but I've had some people doing that, and then it kind of messes up with the future funding of that policy. We've got to look at it, review it, make sure it's going to be okay, or make sure we know how we're able to continue funding it. It's best to fund it in the way we first discussed when you start, rather than trying to shove more funds over and above what you started with. So yeah, easy to go up, not easy, or easy to go down, sorry, not easy to go up in premium without meching the policy, or you would definitely need to go through underwriting again to increase premiums in general. But the paid up additions has a little bit of a window where you can go higher with some companies, but that's not advised, I would say, because even though the company will allow it, doesn't mean it's not going to mech your contract. So where you start is your ceiling, and easy to drop it, but not easy to go up. And that's why, too, again, that I love adding and tagging on some convertible term, because then in those future years, when I do want to increase my premium, or I have a significant amount to increase my premium by, but I cannot put it into the first policy I started with, I can just convert some of my term and continue to grow my banking system with no health or financial underwriting. It's terrific. So in summary, when you're pondering how much should I start my banking system with, my whole life policy for IBC, you just need to decide on an amount that's doable for you, that's comfortable for you, and in my opinion, that's on the higher end of your budget. We certainly don't want it to be an uncomfortable premium where you're stressing to pay it every month, or it feels too tight, too difficult. No, that's not going to be good. You want it to be something that's comfortable, something you can easily do, but, push it a little bit, get it on the higher end, because we can so easily drop it down. So if you're feeling like, I got this, I'm ready to begin this system, and you'd like to partner with me as your IBC coach and advisor, please reach out. You can reach me at Valerie@alphaomegawealth.com. I look forward to connecting with you. I hope that you have a super great week. Talk to you next time.
This is thepodcastfactory.com.